Good morning, everyone, and it's Gail with TradersHelpDesk. I wanted to go over the pattern that developed on the USDJPY. I wrote about it on the market news for Nadex, and it's also part of the online video course that I just came out with. And basically, we had a very nice price pattern and that developed right here. And what I did was actually trade the touch brackets in the demo Nadex account. I wanted to test to see how it worked. And my entry was at 112.50. I had $32 of risk on the trade. And then I took profits down here at 111.15. You can tell this is a very wide bar. And this, I believe, was Thursday evening, so there was only one day remaining. And my risk to reward on that trade was 1 to 1.42. Okay. Now, what does that mean? That means it would take 4 losing trades to knock out the profit that I made on this particular touch bracket. Now, there was also weekly binary options available out of the money that you could have used on this in your live account. You also could have done a spread using Nadex. You could not really have traded that using the spot Forex market unless you were just saying, well, I'm just going to enter here on a whim. Now, that's using a daily. You could have went down to like a 60-minute or a 15-minute, to have entered this. But again, this was an easy one to use and to trade, regardless of what method you were using to trade it. Now, also, as an update on the cryptos, you can also see that right here at this horizontal line was where price was trading when I did the video saying, hey, if you're in this long, you need to tighten your stop up, because I really did believe it was coming down. And one of the reasons is because there's a lot of historical resistance in this entire area. And I think it might have moved from 4,200, just shy of the 4,300 area. And then, of course, it did come down. And you have to remember your job as a trader is to take profits. There's always going to be another entry. And this is a great short chart that demonstrates that, because you had an entry here. You also had an entry right here. You also had another entry here. So in this case, you had 3 different entries. Even if you exited, you would be able to get back in. Now, once it goes to this resistance area here, I don't enter after that. It just makes no sense to me whatsoever. I wait and let the trend change and then re-enter after that. Now, if you were trading the indices, we had entries on indices across the board. There was 3 on the S&P 500. There was, I believe it was 3 on the NASDAQ. We had a couple of entries on the Dow, a couple of entries on the Russell. So it doesn't really matter which market you are trading. These entries work simply because they are based on historical price action. And history repeats itself in the market. It may not be exactly like it was back in the 1930s, 1940s, but these indicators, because they work on price action, and I teach you how to make them leading indicators by using price action, then it's going to work. You're going to be able to enter your trades quicker, and therefore your risk is smaller, and you have the ability to increase the reward. That's your edge.